I'm Alvin Chow, and in today's video, we'll be talking about the differences between RRSP and TFSA. So first off, we're gonna have a bit of a disclaimer. This presentation is for informational purposes only. It's not to persuade you in any legal, tax, or accounting advice. And for those purposes, you may want to consult your own legal, tax, or accounting advisor. So before we jump into the details of each account, why do we need these investments in the first place? So the first thing these accounts do is help us plan for our retirement. They also help increase our investment values due to the tax sheltering effects. And also, the government made these to help benefit us and not to harm us. There's also a lot of other pros and cons, but we're not going to be going through that for this video, and there'll be more of an advanced tax planning video in the future. So jumping right in, what is an RRSP, Registered Retirement Savings Plan account? And why do we want to invest in it? So your investments, as I said before, are tax sheltered. So what this means is that any dividends you make, any capital gains you might have incurred, or any interest are tax sheltered. That means you don't have to pay tax on them when you receive them. This is very beneficial for us since we can continue to compound this without having to pay taxes, and this helps increase our investment value. How do we contribute to an RRSP account? So our contribution room is determined by the unused amount from previous years plus 18% of last year's earned income or the current year's limit. So your current year's limit varies from year to year, and you'll have to check the annual limit for that year to calculate your total RRSP contribution room. So first off, we're going to be going through an example of how to calculate your RRSP contribution limit. Let's take, for example, in 2019, you had 100,000 annual income, and you had an unused RRSP contribution room of $40,000. So what is the available RRSP contribution room in 2020? So to calculate this, you would have to take the 40,000 unused plus the lesser of 18% times 100,000, which is $18,000, or 2020's current year limit, which is 27,230. So in other words, your RSP contribution room would be 40,000 plus 18,000, which equals 58,000 RSP contribution room. Next off, let's have another example where your annual income might be more than that. So let's say your 2019 annual income is $200,000 and your unused RSP contribution room in 2019 is the same at $40,000. So what is the available RSP contribution in 2020? Your available 2020 RSP contribution room is $40,000 plus the lesser of 18% times 200,000, which is 36,000, or 27,230. So in other words, your RSP contribution room in 2020 would be $40,000 plus 27,230, which equals 67,230. So another easy way to check how much RSP contribution room is to go on the CRA My Individual account, and then through the CRA website, you can actually see how much RSP contribution room you have for yourself. So one of the great features of the RSP account is that in the year you make a contribution, you can actually deduct the amount of contributions you make from your annual income. So for example, if you have $100,000 of annual income in 2019 and you made a $20,000 contribution to your RSP account, your annual income would actually decrease by $20,000 and go into $80,000. So this means if you pay taxes at a 25% rate and you pay $25,000 worth of taxes on your $100,000 of income, you'd actually only need to pay $20,000 at the end of the year. So that means you'd be getting a $5,000 check back from the government. So what's important to note here is that contributions can reduce your annual income in the year you contribute. So what a lot of people don't know is that you can contribute to an RSP account without taking the deduction on your annual taxes. So for example, I can contribute in 2017, 2018, and 2019, but not actually take the deductions and have that room for the future. So why would a person want to do this? So for example, in 2017, 2018, 2019, I was making like $40,000 a year and I was paying tax at a very low marginal tax rate. And then let's say in 2020, I'm expected to make $200,000 where my tax rate is very high. So now I have all this unused RSP contribution room, which I can deduct from my 2020 tax return and then save a lot of taxes when I'm in a higher marginal tax bracket. And also, I would want to do this so I can invest in an RSP account earlier and have my investments tax sheltered for a longer period of time. So now we know more about contributions, we're going to talk about things such as over contributions. So you never want to over contribute to your RSP as they're subject to a 1% penalty per month on over contributions. You have a $2,000 grace limit, but after that, you're going to be paying a bunch of interest. So be sure to check your notice of assessment from the CRA each year, and they'll tell you if you've over contributed to your RSP, and make sure you pay back that as soon as possible. So the CRA has made it easier for us, for people who don't know how much income they're making throughout the year, to help contribute to the RSP at the end of the year for tax planning purposes. So you have the whole year of 2019 and 60 days after 2019 has ended to contribute to your 2019 RRSP. With all these benefits of an RRSP account, there's also some cons. When you withdraw from an RRSP account, it's added to your annual income. So for example, if I have $100,000 of income in 1 year and I withdraw $25,000 from my RRSP account, my annual income would be bumped up to $125,000. This means that I'll have to pay taxes on $125,000 instead of $100,000 at the end of the year. And furthermore, with different withdrawals, you'll be subject to withholding taxes from your financial institution. If you withdraw limits under $5,000, you'll be subject to a 10% withholding tax. If you're withdrawing amounts between $5,000 and $15,000, you'll be subject to a 20% withholding tax. And if you're withdrawing amounts over $15,000, you'll be subject to a 30% withholding tax. They do this in order to make sure that you do pay your taxes on your RSP withdrawals throughout the year. The CRA really values two things, and they made these two things able to withdraw from your RSP tax-free, which means that it doesn't add to your annual income, and there's also no withholding tax. The first thing is the first-time home buyers plan. So to be eligible for this program, you have to be a first-time home buyer, a Canadian resident, and this has to be your principal home. So you can withdraw up to $35,000 per person to pay for a down payment on your first home. So if you and your spouse or your common law partner withdraw $35,000 from your RSP account, you have $70,000 to help pay for a down payment on your first home. But then you'd also have to repay this amount back to the CRA within 15 years. The second thing CRA values is continuous education. So they've made a lifelong learning plan where you can withdraw up to $20,000, up to $10,000 per year to help pay for your education in the future. So it has to be an eligible institution, but you have to pay this amount within 10 years. Next, we'll be talking about the TFSA, or tax-free savings account. So to be able to contribute to a TFSA account, you have to be the age of 18 in that year. So how much can you contribute to your TFSA account? So an easy way to check your TFSA limit is, once again, sign up for the CRA login, and then it'll show you how much you can contribute to your TFSA. So another way you can calculate this is that there's an annual limit each year after you turn 18 years old, and you can calculate it that way. And we'll have a table here. So every year after you've turned the year 18, you just add that up, and that will be your TFSA contribution room. So if you've never contributed to TFSA since it opened in 2009, you can contribute up to $69,500. So you're probably wondering, why do I want to invest in a TFSA account? First off, your contributions are not tax deductible like the RSP account. So this means you're going to be paying after-tax dollars to this account. So you'll be moving money from your TD Bank account to a TFSA account, for example. And why would you want to do this? Once again, your investments are tax sheltered. This means that any investments you make capital gains on, you get dividends, you get interest, are tax-free, and you don't need to pay taxes. And what's even better about the TFSA account, when compared to the RSP account, withdrawals are also tax-free, just like a regular savings account. Like RRSPs, TFSA also has a penalty for over-contributions, as they don't want you over-contributing and benefiting too much from these accounts. So the penalty is 1% per month on every dollar of contribution you make. Unlike the RRSP, there is no grace amount of $2,000, and you'll be paying interest on every over-contributed dollar from the month it starts. So knowing these penalties, it's important to know how much you can contribute to your TFSA each year and how to calculate this. So we're going to be going through a few examples on how to calculate your TFSA contribution room. So for our first example, let's say you have a 2019 TFSA balance of $100,000. In 2019, you also withdrew $25,000 from your TFSA account, and you had an available contribution room of $10,000. So in 2020, how much contribution room do you have? Knowing 2020's contribution limit is $6,000, you can contribute up to $10,000 from unused limits from last year, plus the $6,000 new from this year, plus your withdrawals from last year, which equals $25,000. So in total, you can contribute up to $41,000 in 2020 to your TFSA account. So next, let's talk about a really common mistake in the TFSA account where people over-contribute all the time. So using the same example, in 2019, we have the TFSA balance of $100,000 and you have an available contribution room of $10,000 in 2019. On February 1st, 2019, you contribute the remaining $10,000 to your TFSA account. And then in March 2019, you withdraw $25,000 from your TFSA. And after withdrawing, you want to recontribute $25,000 to your TFSA account in April. So do you have an overcontribution in 2019? You actually do. Since you withdrew the amounts in March of 2019, you can only recontribute those same amounts in 2020. So make sure when you withdraw from your TFSA, you don't recontribute that same withdrawal amount because it's not going to be in that year's limit, but the years after. So in summary, we're going to weigh the differences between the RRSP and TFSA account. To be eligible for the RRSP account, you need to have income. To be eligible for the TFSA account, you usually need to be the age of 18 in the year you contribute. And then the RRSP account, the contributions are tax deductible in that year or in future years if you claim not to use those deductions. In the TFSA account, they're after-tax dollars and they're not tax deductible. In both accounts, the investments are tax sheltered. This means you don't need to pay any taxes on capital gains, dividends, or any other investment income that you may make. And then in the RRSP account, your withdrawals are tax withheld, as well as they add towards your annual income. And then in your TFSA account, they're tax-free. So I would invest in an RRSP account if you're in the highest marginal tax bracket and believe it'll go down in the future. This means that you have an advantage in a tax deferral from taking the tax deduction in a higher marginal tax rate and then adding it back to your income when you have a lower marginal tax rate in the future when you make those withdrawals. I would contribute to a TFSA account in any other scenario, as it's very similar to just a savings account, but any investments you make are tax-free. It is almost always beneficial to invest in a TFSA account and also beneficial to invest in an RRSP account. So why not do both? So if you have any questions on these different accounts, please feel free to leave a comment below or email us in the email in the description box. And please like and share the video if you thought it was helpful, and subscribe and hit the little notification bell so you don't miss any of our future videos. Thank you, and see you in the next one.